Good morning, everybody. It's Wednesday, April 5th, 5:25 a.m. Central Time as I speak here. May corn futures down 4.25 at 649.5. May soybeans down 6 at 1511.5. May Chicago wheat down 13.5 at 678. May Kansas City wheat down 16.25 at 856.25. May spring wheat down 14.5 cents at 875. We're going to start off with Brazil, Argentina, and soybean meal this morning. So it sounds as if Brazil will export more soybean meal than Argentina this year for the first time since 1998. Argentina, of course, has had the worst drought in 60 years, resulted in a disastrous growing season. Versus preseason expectations, the Argentina crop is going to end up being less than half of what was initially expected because of this drought. The Rosario Grain Exchange in Argentina estimates Argentina's meal exports at just 20 million metric tons, which would be down about 25% on the year if realized. Brazil is likely to export about 21 million metric tons of meal this year based on the most recent USDA estimate. Argentina is probably going to have to import a sizable amount of soybeans from Brazil this year in order to keep its processing facilities operational. Despite a recent correction, the U.S. soybean meal market continues to trade at hugely elevated levels. The U.S. will likely be number 3 in regard to meal exports this year, behind Brazil and Argentina. So for the moment, the global meal situation is tight. Argentina is typically your biggest meal exporter. They're not going to be this year. They're a big processor. They're going to have issues with that this year. Moving forward into the future, look out a couple of years, we may have a glut of soybean meal in this country due to all of the new crush facilities that are being opened up. But for the moment, things still pretty tight. Let's get back to this weather story. So we do have some snow moving across North Dakota into Minnesota this morning. South Dakota, parts of North Dakota, Minnesota saw some snow yesterday. Guys, I don't have a great indication of exactly what fell, amounts, that sort of stuff. So if you're in any of these areas that caught snow, drop me a comment in the YouTube video here. Let me know where you are and how much snow you caught here the last couple of days. This system is going to exit after today, and your snow totals, and again, I don't know if these are accurate. This is supposedly as of this morning on my screen here. I mean, you've got a foot, 2 feet of snow in a lot of these areas of North Dakota, parts of South Dakota, Minnesota. I'm not sure exactly what the amounts will be after this system passes, but if you guys have some info, let me know. We're going to see a warm up next week, the way that it looks. This is this map on my screen here. This is expected maximum temperatures next Wednesday, so a week from today. And you're talking 70s, maybe even upper 70s in parts of South Dakota, maybe upper 70s in parts of southern Minnesota. Central Minnesota, you're talking more mid 50s through into the 70s maybe. North Dakota is going to be the coldest still. This eastern half of North Dakota in particular, highs only in the 40s or 50s. But I think the warming trend is coming. I mean, it's inevitable, but the warming trend is going to be messy. The meltdown is going to be messy. Still a lot of chatter regarding prevent plant, acreage switching, all of those things in North Dakota, South Dakota, Minnesota in particular. Guys, a cool premium video I had out yesterday. My friend Chris Barron from AgView Solutions joined me. Will corn win again? Early 2024 farm budgets. There's 2 reasons why it's important to start looking at 24 budgets right now. First off, I think it's important just to see a general lay of the land in terms of which crop is penciling better economically. I know it's going to change and there's a lot of time. Secondly, and probably more important, is starting to work on your own 2024 farm budgets. Chris talked about some best practices and some things to be aware of. If you guys are interested in the premium stuff, go to standardgrain.com this morning, click the subscribe button. You'll be taken to this page where it'll take you about 1 minute to sign up, guys. Remember, it's $50 a month. Cancel at any time. No other fee, no other obligation. Nobody will try to sell you anything else. Just a ton of premium stuff from me every single business day. House Speaker Kevin McCarthy will meet with Taiwan's president today. I believe this is going to be in California. The Chinese government, again, not happy about this. They say this is an escalation and they're threatening retaliation again. U.S. officials claim that such high-level visits are routine type stuff. Former House Speaker Nancy Pelosi visited Taiwan last year, and China got really upset about that. Resulted in military exercises near Taiwan. So for the moment, the tensions remain. Notable is that China has not been in for U.S. corn. No flash sales reported yet this week. So maybe the buying spree is over. I'd love to see it continue, but we haven't seen anything yet this week. The Chinese yuan is now the most traded currency in Russia. So, after the invasion, the U.S. government basically kind of seized Russia's dollars is kind of the way that it worked, and it's slightly more complicated than that. But this change comes 1 year after the invasion and all these sanctions that the West put on Moscow. Before the invasion, the Chinese currency's trading volume on the Russian market was pretty minimal. But in February, the yuan passed the U.S. dollar in monthly trading volume for the first time. Russian businesses are just really being forced to use currencies of other nations, nations that are not taking part in these sanctions. So this is all interesting stuff. I've had a million questions about this. Like, Joe, is the dollar losing its reserve status? What does this mean that China's trying to get away from the dollar? Similar story here is that China and Brazil, this was reported last week, but China and Brazil are doing something similar. They've struck a deal apparently to kind of ditch the dollar and use their own currencies, go direct with financial transactions and cut out the dollar in order to reduce costs, promote greater bilateral trade, all of that stuff. I'm not a currency expert by any means, but I do think this has some implications. I've got a really great premium video that's going to come out with a guest early next week regarding this whole currency situation. What does it mean when China and Russia and Brazil and these other countries move away from the dollar? I'll get to that next week. Ukrainian farmers are going to receive some support from Western countries and elsewhere. Western nations, agricultural companies are donating and lending funds to Ukrainian farmers, hundreds of millions of dollars toward rebuilding the country, their agricultural infrastructure, all this, despite the war, which is ongoing. Agricultural production, exports are way down. For the moment, the Black Sea grain deal remains in place. It expires on May 18th. We don't know what Russia is going to do there. A lot of people believe that there's going to be an escalation in the war this spring and into the summer. But for the moment, some more money headed toward Ukraine. In some economic news, U.S. job openings fell below 10 million for the first time since May of 2021. This is JOLT data, and it's from February, so it's backdated a little bit. But available positions in February totaled 9.93 million. That was down 632,000 from January. Analysts on Wall Street expected a number near 10.4 million. The Fed has been targeting the labor market. Jerome Powell wants you to lose your job. They want unemployment to increase. They really need to do that in order to tame inflation, unfortunately. I mean, the unfortunate thing here is that in order to tame inflation, and labor and wages are the stickiest piece of inflation, they need to get these labor and wage numbers down. And the only way to do that is to kill jobs, unfortunately, which is really not the way that we'd like it to go. When you look at the JOLT numbers, they're still super high. I mean, 9.9 million open jobs is still fantastically high versus anything you've seen in the modern era here. So maybe the labor market is cooling. I don't really know. I haven't heard a ton in regard to layoffs outside of like the tech sector. There's been a lot of layoffs in the tech sector, but they added a whole bunch of jobs in the post-COVID low interest rate environment, that sort of deal. So this is kind of a moving target, and it's going to normalize eventually, I would imagine. Cattle market was lower yesterday. Feeder cattle were lower yesterday. I think there was some light cash trade, but not enough to establish a trend. Outside markets, U.S. dollars up a little bit. Stock market's off. The S&P's down 9 points. Dow Jones down 50. Precious metals are mixed. Crude oil is down 21 cents, and the May WTI at 80.50 last trade. Have a great day, guys. I'll talk to you Thursday.